What's up, guys? It's Mr. Fit to Flourish, and welcome to the Fit to Flourish podcast. Guys, this is huge, okay? This is huge. So, the T+1 settlement law comes into effect today, and today is May 28th, 2024. And basically, what this means is that before, if you had a cash account trading stocks, then when you purchase stocks, then the money that you use to purchase those stocks would have to be processed, and it would take 2 days for that money to settle before you can use it again. Now with this T+1 settlement, now you can use that money, and then the money will settle the next day. So this is pretty big. This is already available for options. So when you trade options, you'll see that your money will settle the next day. However, when you were trading stocks, which are less risky to trade, it took 2 days to settle. So that kind of doesn't make sense why you would allow options to settle next day when they're a lot more risky, while stocks are less risky and would not settle the next day. But now they're going to be settled the next day. So this is a new SEC rule requiring trades to settle in one business day, guys. So it takes effect today, May 28th, 2024. And like I said, for decades, Wall Street has been processing trades faster and faster. And now on May 28th, the industry will hit a new benchmark. When it moves from the T+2, again, that's when your money takes 2 days to settle trading stocks. So we're trading equities, to the T+1 settlement cycle. So instead of having just options be available, which are derivatives and they're inherently risky, okay? So it makes sense now to have stocks to be able to settle next day as well. And kind of to break it down again, it's kind of goes something like this. So what happens is when you trade, so let's say you have a $1,000 account, okay? So you have $1,000 in your account, and you're trading stocks. You purchase a penny stock, say you purchase a penny stock using all that $1,000, which is what you have in your account, and it's a cash account. You make $500. Now you have $1,500. But you can't use that $1,500 to put on another trade. You can't use it for 2 days. So now you have to wait from, let's say you traded on Monday. Now you have to wait from Monday. You have to wait till Wednesday to put on another trade. So you'll miss out on all trades on Tuesday because you only had $1,000 to use in your account. You made $500, but all that money has to settle. Okay. But now with the new rule, if you purchase that same, if you make that same trade with that $1,000, it turns into $1,500. Then now that $1,500 is going to be settling on Tuesday, and you can put on another trade and then trade again on Wednesday and then Thursday, and et cetera, et cetera. So this makes trading a lot easier and a lot safer now, that it's going to be with stocks primarily, which are equities. And again, equities are going to be a lot safer than options. Options are extremely volatile, inherently volatile, and they come with intrinsic, extrinsic value. And then sometimes you might only get out of the money options, which are only extrinsic value, which are very, very volatile. So that's just something to kind of update you guys on that today, May 28th, 2024. This this legislation goes into effect. So just beware of that. If you did want to trade stocks and you're kind of being held back because the T+2 rule, well, now the T+1 rule goes into effect, and it was a partnership done with like a lot of the banks, and it was being put into effect by the SEC, the Securities and Exchange Committee, and now it is a full go. So that is an update for today. If you guys didn't know what the T+1 settlement was about, well, that's what it is. And I hope you guys have a great time trading. Have fun and stay safe out there, guys. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance,